China's yuan moving Asia stocks sharply higher today. Not higher, sharply higher. The Nikkei, Kospi, Shanghai Composite, all up today. There we are. Nikkei, 2.5%. South Korea up 1.5%. Shanghai up almost 3%. All right, so let's go with this. How should you invest in China on the back of China's currency moves? Let's go to Dave Gentry, CEO at Red Chip, a firm focusing on high-growth Chinese companies, and Frank Yao, Senior Portfolio Manager for Neuberger Berman's Great China Equity Team. All right, Frank, start with you. Give me a, for instance, how do you read this now? The Asian markets are up. What about the Shanghai itself, which was down, what, 25%? Is it time to buy China?
Well, I guess the renminbi appreciation is obviously an interesting move, is as expected, but obviously timing is kind of interesting. To us, this is obviously positive to the China market, both domestic Asian market and also Chinese company listed in Hong Kong. I think it is quite interesting, there are many sectors, both on domestic consumption side, but also a lot of, airline China, Heng'an International Group, Dengwei Industry, and so on. They all is very interesting companies. For Air China's, the majority of its debt actually denominated in US dollars. Obviously, if you have renminbi appreciations, it will add very meaningful, the renminbi appreciation to its bottom lines.
Okay, so in other words, we should see more purchasing power from the Chinese consumer, which should lend itself to some of these companies that you're looking at. Dave, let me ask you, what does it mean for other companies and other countries in the Asia region? You know that, Americans, we have this insatiable desire for cheap goods. So the reality is, if this plays out, if the yuan continues to appreciate in the coming years significantly enough that it makes those goods too expensive for all us Americans, aren't we going to seek these goods from other locations, such as Vietnam and other countries? Therefore, what would it mean for investing in other countries outside of China?
Well, that's actually a very interesting question. I think it really divided.
Actually, let me throw that one at Dave, and then we'll come back to Frank.
Sure.
Well, I think you're right. You'll see, increased imports from Vietnam and other Asian countries. But at the end of the day, we have to remember that 1/3 of the listings on NASDAQ in 2009 were Chinese companies. So, of course, I'm focused on NASDAQ and New York Stock Exchange companies, companies in China listed over here in the U.S. But, you're absolutely right. But I think the key is look for companies in China in the energy sector. I love coal. China, 4/5 of their electricity is generated by coal. They're a net importer of coal, though they're the world's 3rd largest producer of coal. So you look for names like LLEN, L&L Energy, which operates in southwestern China. Look for names like CBEH, China Integrated Energy, which is a fuel distributor. China still imports 40% of its oil. And so domestic consumption will increase with the revaluation of the yen, and it's going to put a stay on inflationary pressures, and it will indeed increase purchasing power. But again, I focus on Chinese companies listed over here on the NASDAQ.
Gentlemen.
That's where my focus is.
Thank you very much, Frank, Dave. We appreciate all the insight.